All right, team. So today is day 11 of our summer boot camp. Today is one of my favorite lessons that we are going to be going over. Today is one of my favorite overall just lessons in general or parts of stock trading, and that's breakouts, right? Who doesn't want to learn about breakouts? Who doesn't want to learn about what makes people the most money in the stock market? I love going over this. I love talking about this. I love trying to find new breakout chart setups. But in the 5 years that I have been stock trading, these chart setups that I'm about to show you are some of the best ones. Now, there are going to be about one or two that I'm going to teach you guys probably in the upcoming lessons. And that's just because they are a little bit different than the ones that we are going to be going over right now. But these are about 5 to 6 different breakout chart setups that every single trader should have underneath their belt. Now, some of them are very popular chart setups that you guys could go on Google and you guys can type them in on Google and be able to get more information. And some of them are just breakout chart setups that I've noticed over the years work out very nicely, and I've just given a name towards them. So before we start getting into any sort of breakout chart setups, before we start diving into these patterns that you guys should remember, we need to go over two different things first. Now, this may be a review to some of you, but to new traders, the thing that we're constantly looking for in the stock market is U shapes and triangles. That is really all we are looking for while finding breakouts. And I know that may sound a little bit weird, but we are constantly looking for U shapes and triangles. Now, why would that? Why would that be? Well, U shapes are going to represent a break of resistance, and triangles are going to represent a squeeze on a stock. So I'm going to do a little bit of drawing right here to give you guys a little bit of a better illustration. And we're going to start with U shapes. U shapes are going to be a break of resistance. And as we said, triangles are a squeeze of a stock. So how is a U shape? How is a U shape a break of resistance? Well, let's start right here. Let's go with right here. And let's talk about this U shape. So if we have a U shape and we're going to make this extremely basic, this would be a U, right? Same exact picture I just showed you. Now let's make this more as a stock though, right? This could be the stock has opened up right here, right? This could maybe be the stock has run up to this area right here and then made a U-shaped pattern. But a U shape does what? It establishes some sort of resistance. If the stock opened up right here and then fell and then try to U shape up and around, what happens? Well, we have resistance right here from the beginning part that we're looking to break out of. Old chart history, this could be the open detailed resistance, right? This could be the high of the day detailed resistance. And what we're basically looking for is a break of that resistance line. So let's say, again, let's just draw a couple different scenarios. Let's say the stock opens right here, falls at the start of the day, starts coming back on up. This would be a U-shaped pattern. Now, again, coming back up towards this open, we know that this is going to be a resistance line. And where do stocks break out? At the break of resistance. And that's where the stock could get a lot of big buying volume and start shooting on up, right? What else could we possibly see? We could possibly see a stock, spiking at the start of the day, start spiking very big, finally hit some sort of strong resistance line right here, start falling on down, make a U-shaped pattern, come back on up, and then what happens? Well, again, now we established our resistance, and now we're looking for that next leg on up. Now we're looking for that next spike. Now we're looking for that next rip. Now we're looking for that next run. So when we see these plays, guys, right here, we see that these plays have a lot of potential to spike because they're breaking resistance. A break of resistance leads towards its next leg up, lead towards an increase in volume because this shows that we have not been able to get above these areas before. So in all a U-shaped pattern is that this stock has been able to establish its resistance line, and now coming back up towards its resistance line, we're able to get that nice breakout. So those are what U shapes are so great of. And that's what we're constantly looking for in the stock market. If it's a spike, if it's the start of the day, it could be, after one U shape forms and then another U shape forms and then another U shape forms. That sometimes happens, right? So we see a lot of big time moves off of U shape patterns. And really that just comes down to breaking resistance. Now, what about triangles? Why are triangles important to search for? Because when we look at a triangle, right? We look for this. How is this, anything related to the stock market? Well, let's kind of flip this triangle. Let's kind of turn this triangle to its side right here. And now what does that give us? That's going to give us something more like this, like a right-hand triangle, right angle triangle, something along those areas. And this is something that we see a lot more in the stock market. And where would we see this a lot more? Well, let's imagine if the stock, starts spiking on up, right? Hits resistance, comes on down, hits resistance, comes on down, hits resistance, comes on down, gets tighter, and then gets a nice breakout. Well, there's, a nice triangle, right? Maybe if the stock does what? Maybe if the stock just spikes at the start of the day, then comes back on down a little bit, right? Spikes at the start of the day, comes back down a little bit, spikes at the start of the day, comes back down, and then all of a sudden what happens when it gets like this, right? Then it shoots on up to the upside right there, right? And where's our triangle right here? Well, you can see, right? We are building some lower lows while also building some higher lows. And there's our triangle right there, where the stock could lead towards a nice big breakout, lead to a nice big rip. And again, that could be for bull flags, which we already have, right? That could be for possible bear flags, where the stock, is opposite and starts dumping that way. This could be from a big time breakout in a daily chart where it has a descending triangle breakout pattern and a possible big breakout to the upside there. But every single breakout usually has some sort of what? Some sort of U-shaped pattern or some sort of triangle towards it. And that's just because U-shaped triangle patterns and triangles have resistance. They establish resistance. So now when we look at these, what are we starting to get? I start thinking about a little bit different, right? I start thinking about these letters or U-shapes of letter, and then this shape right here a little bit different. I'm saying to myself, wow, this is really just, one big break of resistance right here. Right here, this is the stock squeezing, getting tighter and tighter. U-shapes establish resistance, break of resistance, triangles are going to be squeezes. Simple as that. So now we have that under our belt. And now we know what to look for in the stock market. Now, when you guys are trading and you guys are seeing certain squeezes or you guys are seeing certain U-shapes, you can automatically say to yourself, oh, wow, you know what? I know this is coming on up and we could possibly see some big volume start moving on in. Now, let's start with some very easy top breakouts, and let's get a little bit more advanced, right? The moment you guys been waiting for. So one of the easiest breakouts to be able to see, guys, is what we call a $1 breakout. A $1 breakout. What's the criteria for this $1 breakout? What should we be focusing on right here for this $1 breakout? And a $1 breakout, guys, it's really just when a stock goes and breaks $1. That's all it is. A stock is going to be able to break $1, and that's when we see a beautiful rip, we see a beautiful climb, we see a beautiful run, and we see the stock, go on a take on off. So why do I call it a $1 breakout? It's because the stock breaks that $1 mark. Now, why would a stock go on such a big spike, go on such a big rip when it breaks $1? Well, what do we know about $1? What have I taught you in some of the previous lessons? That $1 is one of the strongest resistance lines in penny stocks. What are the top 3 strongest resistance lines in penny stocks? $1, $10, $5, in that order. So when we break $1, that's when we get a lot of hype. That's when we get a lot of attention, and that's when stocks take on off. Now, what else does the stock need to be? It needs to be a low float. And a lot of the plays that we go over, guys, they are going to have to be low float, under 1 million in float, 2 million, 3 million, 4 million. That's okay as well, but low float is definitely better. This is a play that only happens on the daily chart setup. All right. Now, again, if you say to yourself, oh, the stock's breaking $1 a deck and it's on the 1 minute, the 2 minute, 3 minute, this has to be on the daily chart setup. Now, why is it, guys? Because it needs to be under $1 for at least 3 months. Now, let's think about that. Why, for a big breakout, does a stock needs to be under $1 for at least 3 months? Well, breakouts, guys, when we start seeing, stocks go on giant spikes, stocks go on giant rips, it's from stocks that haven't broke out in a very long time or haven't gone on any sort of big time rip in a very long time. Breakouts are excitement. Breakouts are momentum. Breakout is when things go absolutely crazy. So what leads towards absolutely craziness? The ones that surprise. You ever watch like a game and the underdogs win, right? Let's say it's the worst team versus the best team, and somehow the worst team is like hanging in there and they start winning. Isn't there just like an energy? Or isn't people just like, wow, this is amazing. Oh my gosh, I'm rooting for them now, right? A $1 breakout is a stock that hasn't been above $1 for at least 3 months. And the longer it's been underneath the $1, the better the breakout can be. Because let's think about it this way. Imagine if the stock was above $1 last week. It was above $1 last week, right? And now it's coming back up to $1. Is there any sort of excitement towards it? It was just above $1. Who cares? Right? It was just above $1. But the first time the stock is breaking $1, right? That's where you're just like, wow, this stock is honestly moving on up. If it was just above $1 the other day, it doesn't really mean too much. There's not going to be any excitement. It's not going to be any sort of hype, right? One way I always kind of think about this is, and again, I don't know if you guys ever watched this, but when I was younger, I used to watch like the X Games a lot. And one of the big things that was like, huge growing up when I was a kid for the X Games was when Travis Pastrana, the dirt bike rider, did a double backflip. He did a double backflip, and the whole place went insane. It was the first time anyone's ever done a double backflip, and the whole place went insane. It was all over ESPN. It was going crazy, right? I turned on the X Games like last summer for the first time in a long time, and every single guy was doing double backflips. Every single guy was doing double backflips, and the judges were giving it like 7 out of 10s. But the first time it was done, it was 10 out of 10. Best thing Action Sports has ever seen, all over ESPN. It was amazing, right? Now again, a couple of years down the road, every single person's doing it, and the judges are like, "Nah, seen it, done it. Go do something better." Right? It's the same exact thing when we're talking about these $1 breakouts. These $1 breakouts, guys, we want to see a play that has never broke $1 or has not done it in a very long time, because that's what brings in the most excitement, right? Also, that last little thing we have right here must be a top gainer, or I'm going to say needs to have a ton of volume. But usually stocks with a ton of volume usually are top gainers. If we see a stock, let's say a stock XYZ, and the stock is currently at 70 cents, and the stock goes from 70 cents to 80 cents, to 80 cents to 90 cents, 90 cents up to $1. Not only is it a top gainer, but it has every single attention towards it, all eyes towards it. Now, little side note, every play, every breakout pattern that I am going to teach you guys today needs to have a lot of volume. It usually needs to be one of the best top gainers of the day, or the stock needs to, like for a red to green move, needs to have a lot of eyes towards it, at least in pre-market. All right? Because there's going to be a lot of times that a stock will have extremely low volume. No one's playing it at all. Not one person is looking at it, and it's just a whole bunch of like little dash lines from random orders, right? And someone will be like, "Oh, bull flag pattern, breakout huge coming up." A stock with no volume isn't all of a sudden just going to randomly, shoot on up and start taking on off just because it happened to kind of look like a little bit of one of the patterns I'm going to teach you. These patterns are all patterns that have very high volume already. So when the pattern does develop, everyone knows the big breakout's coming. It's not, some super secret stock that no one's have ever heard of before that just randomly has a couple buy orders that sets itself up in a little bit of an order, and you're like, oh my gosh, the biggest breakout I've ever seen is about to happen. It's like, no, if the stock only has 1,000 people, trading it, or 1,000 in volume, it's not randomly just going to bring in 1 million shares of volume. All right, they need to already be super hot stocks for them to work. All right, so what would be some good examples of this, guys? We have some low floats, daily chart setup, needs to be under $1 for at least 3 months. Prior must be a top gainer, right? What would be, a good example of this one? Well, let's just go back right here for a little bit. And one I don't want to just put a screenshot of because there was a lot towards it. This was EBIO at the time. EBIO actually changed their chart. Oh, geez, I'm blanking out on this one. But EBIO was a great example. I apologize right here. Let's go to CANN. This was about 1.5 years ago. CANN. Look at this breakout. And again, we can go back towards this. And look how big CANN went on such a massive move, such a massive run when this stock came and started breaking through this $1 mark, ran all the way up towards around $11 before. So CANN, you could see when we really start pushing, when we really start taking on off, when we really start breaking through these $1 areas, we can see stocks absolutely rip, absolutely run, get tons of activity, gets tons of volume, right? So I always like to see, these nice big $1 breakouts. You know, $1 breakouts bring in a lot of hype, a lot of momentum. You can see right here, again, it even did it twice. You know, like look right here, right at this $1 area, right? Right at this $1 area. So we look back right here, we are underneath $1 for at least 3 months. The stock is a top gainer from 70 cents, runs up towards $1, and then spiked all the way up towards $5. So look at the stock, you know, really take on off. It's a low float play. It's been underneath $1 for at least 3 months, broke $1. Look at all the hype that came flying in on this play. And a lot of the momentum, a lot of the hype does come through at the break of $1. So the break of $1 brings in a lot of attention, a lot of hype, and these plays are usually multi-day holds. So sometimes you're going to see the stock break $1, it pops up above it, and then maybe a day later it has one red day, 2 red days, but then it starts picking up volume again. A lot of $1 breakouts, guys, are also very nice swing trades that can lead towards a lot of big potential. All right. So CANN, an awesome $1 breakout right here, which really started getting a ton of volume all from the $1 breakout. So low volume play, or excuse me, low float play, big volume started moving on in. Stock is a low float stock underneath, you know, $1 for at least 3 months. Stock started going huge. That's all from that nice $1 breakout. Something I definitely want you guys to be ready for. Something I want you guys to be focusing on. Let's keep on moving back towards some of our top game. Let's start going back to some of the other plays that we want to be looking at. And let's get this going right here. Whoopsie. Let me fix this for one moment. There we go. All right, cool. Now, what do I want to be going towards next? I want to be going towards U-shape breakout patterns. We've gone over $1. Absolutely awesome. Very simple, very easy, not anything that should be complicated. Now, let's talk about U-shaped breakout patterns. Another very simple, very easy thing. I'm not here to complicate your trading, right? We talk about U-shapes. We talk about triangles. I could come up with some very tough theory and make it sound all complicated, but I don't want to do that, right? Let's make it, you know, very simple. So what do you think is a U-shaped breakout pattern? What we were going over before, right? What we were talking about before, what we were going over, you know, talking about these U-shapes and how when these U-shapes form, we establish resistance and then we make a U-shape and get a nice big breakout to the upside. So what is the criteria for a U-shaped breakout pattern? A low float, under 1 million in float, or under 1 million in float, that's always best, but anything under 5 million, we consider a low float. Can be any time, right? Can be any time frame. So this could happen in the 1 minute time frame. This could happen in the 2 minute, the 3 minute, the 5 minute, the daily time frame, right? Before the $1 breakout was only happening on the daily time frame. This could be on any time frame that you guys want or you guys see it. Watch for a break of resistance in a U-shaped setup. And we're going to be talking about the different areas to buy in a U-shaped breakout setup coming on up. So let's go over what a U-shaped breakout setup is. And then at the end of this, we're going to go over the different times that you guys can buy on a U-shaped setup. And last but not least, of course, you guys must have large volume. All right. So you must have large volume. So what would a U-shaped breakout chart setup look like? Well, here's a good example, right? You guys can see right here. The stock goes on a very nice move. This is CDXC. The stock goes on a very nice move up. The stock U-shapes up and around and then gets a nice breakout. Notice what is also happening a lot of times when you guys see these type of plays. These plays, you are going to see usually 25-cent climbs at least. And it's really, you know, really pretty perfect on that, where the stock runs up to 325, U-shapes, hits 325. Look at the bottom. The volume starts moving on in. Volume starts moving on in. The stock goes from 325. Where does it run up to? Next natural resistance line, 350. We learned about this. Support and resistance lines. Support and resistance lines, right? What do we have? $1, $1.25, $1.50, $1.75, $2, $2.25, $2.50, $2.75, $3, $3.25, $3.50, etc. Right? So usually we buy at the break of one, we can sell at the next. And we could see, you know, how great this worked out all the way up towards around that 350 mark, because the stock ran up, established resistance, formed a U-shape pattern, came back up to the U-shape, volume came on in on this play, and the stock ran up to a new high, which is absolutely awesome, right? And that's you know, something that I definitely want you guys to be looking at. Now, when you guys look at U-shape patterns right here, you guys can see a lot of times U-shapes happen off of top gainers, which is one of the reasons why it's already so hot and a lot of people can play the stock, very easily. So if we look at this play right here, what do we have? The stock already went from 80 all the way up to 325 at the start of the day. CDXC was already on a lot of people's watch list. CDXC, a lot of people are already playing the stock. This stock ran on 40 to 50 cents at the start of the day, right? This is on the 1 minute time frame right here. So within about the first 10 minutes, this stock ran a good 40, 50 cents. After the stock started having a pullback, traders noticed it was starting to move back on up. Oh yeah, that's the stock that was a top gainer this morning. People start flooding back into it on its next leg on up. So it's not just randomly no volume play random stock. This stock was a top gainer in the morning, became again a U-shaped pattern, then ripped up to new highs as people ran back over towards it. All right. So U-shaped breakout patterns, absolutely awesome, very good, and it's one of the most simple and also one of the most effective. They are very great patterns for, of course, you guys can look at for you guys to play, and they work out a ton, right? As long as it has volume, this play is going to lead towards a lot of profit for you. So just really look at where's the resistance established, and you can see right at the break of that resistance where a lot of traders start, moving in on these plays, where the stock starts taking on off. All right. Now let's keep moving on to another U-shaped pattern, and another U-shaped pattern along the same exact lines, the same exact thing, guys, is going to be the red to green move. So red to green move. This is going to be just like a U-shape, only we don't have that morning run up. So it's everything is going to have that U-shape criteria. We want it to be a low flow play. We want it to have a lot of volume. Usually U-shapes, where do they get the volume if they don't have the morning spike? They usually have volume in pre-market from a gap up, or they have a very hot press release people are watching in case volume does move in. So what we're going to be looking for is watch for the fall at the open and a break of the open price point. After that, guys, it must have large volume as the stock starts moving on up. Now, if you type in on Google, little heads up, if you type in on Google red to green move, the proper definition is going to be when you break the previous close. So what would that mean? If you broke the previous close, if a stock closed, let's say at $6, okay, and the stock opened up at, let's say, $5.75, you're lower than that $6 area. So when you break through $6, that's when you can get a lot of hype and a lot of momentum, which I agree on, which, is definitely 100% true. But a lot of times these stocks are going to have big gap ups, and these stocks are going to not be anywhere near their close. And what I call a red to green move is going to be anytime it breaks its open. If its stock is at $1, it falls to 90 cents and gets back above $1. Now it's gone from red on the day to green on the day. I'm not talking about, from yesterday carrying over into today. I'm talking about the actual open to where it's currently at. So what would this look like? Here's an example of this right here, where the stock, as you guys can see, opened up right around this 560 mark, dropped at the start of the day, U-shape up and around, and then, went on this big time breakout. So we usually see, again, drop, U-shape. Where does the big buying volume come through? At the break of the open or the break of resistance. And that's where all this, big time ripping happens, where the stock, takes on off, or we see a beautiful climb right here. So notice this is the same exact setup of this. It's just we're just taking this first part out. That's all. We're just taking this first part out. This whole entire first part gave, again, a lot of hype and momentum towards this play. This play got a lot of hype and momentum possibly from news, right? This play got hype and momentum possibly from news. This play got hype and momentum, this U-shaped pattern right here. This got hype and momentum from a gap up, right? People were looking at this play because it probably had news and had a gap up. So instead of like the stock having to fall all the way back down to like 425 for it to turn into a red to green move, I count any sort of red to green move from where it opens to, again, when it breaks out. If the stock opened up right here, let's say 550, and now it's down towards near $5, it's right on the day in my eyes. Now coming back up to 550, now it's green on the day. But I understand it's green on the day because, again, it's above where it closed at yesterday. But again, this is what I like to focus on because it's very easy. Is that all we're looking for is that U-shaped pattern again for the break to the upside. So this is what I like to call a red to green move. All right, so we have those couple of examples. This is, again, CATB, what we just went over. So I just want to make sure that you guys get the difference between a regular U-shaped pattern and a red to green move. A regular U-shaped pattern is a top gainer of the morning, then U-shapes. A red to green move is a stock that usually has a gap up or some news that falls at the start of the day, breaks the open, then goes on a massive rip, then goes on a massive run. And the U-shape and red to green move, those are the two primary U-shape setups. Because there really can't be like too much more than just, either a U-shape or a red to green move. There's not really too much more you can do with that. But while these are, let's say only two different options, they are extremely profitable. And you guys will be very consistent with your trading if you guys can just spot these out and be able to trade them. Because sometimes a lot of people say, hey, you know, um, a lot of the times, a lot of these people are going to say, hey, the stock's dumping on off. But right when you see the stock, start moving on up a little bit, you say to yourself, whoa, okay, watch the break of the open. I know this red to green move. But as I said, yes, again, if I mispronounce something, red to green move usually is the break of the previous close. The break of the previous close is where the stock is considered going from red to green, but I count it as the open of the day from red to now green. So just make sure you guys understand that, just because that works out very well. So that's what I like to call a red to green move. Now, if we are done with our U shapes, right? We're done with our U shapes at this time. What can we be going over towards? Well, now we got to go over towards our triangles. Now, when we get over to our triangles, one of the first ones that we got to go over is obviously going to be our bull flag patterns. All right, so our bull flags are absolutely great. All right, our bull flag patterns are absolutely awesome. Now, when we look for a bull flag pattern, as you can imagine, this is the criteria. We're looking for a low float. This can happen on any time frame. We're going to watch for consolidation after a morning spike, and it must be a top gainer. So this, guys, if you see a little spike and a little consolidation, it's not a bull flag pattern, right? A bull flag pattern is going to be a clear-cut bull flag pattern. If it's not clear, if it's not, okay, that's a beer. If you have to say to yourself, is that a bull flag pattern? No, maybe, kinda. Well, then again, it's not one, right? These patterns are going to work out when there's the most volume, when people are following the setup. So what would a bull flag pattern look like? It would look like this, where we have a nice big spike. Stock goes from $6 to $7.10. The stock goes from a dollar spike right here. That's a big spike, a dollar spike. And what do we have? We have the triangle forming. Now, what happens on these triangles right here, guys? What is really happening? We are building higher lows while also building lower lows. So the stock is squeezing itself and getting tighter and tighter and tighter. And that's what we're looking for. Imagine if there was a river, right? We had a river, and at the river started very wide and started getting tighter and tighter and tighter inside this narrow valley. What happens? Well, eventually, again, that water pressure is all getting pushed into one little area. That's where you get crazy rapids, right? You got a big, river, a big wide river. Once you go through, very tight areas, that's where all the water is collected and things get very wild. That's where you have rapids, and that's where you have, water flying in every direction, because it's all that huge energy of water is all in such a tight little area. All this huge volume is getting squeezed in this tight little area, this tight little canyon, until what happens? Boom! You get that breakout to the upside, right? You get that breakout to the upside, which is absolutely great. So I want you guys to be able to understand this, that you're able to see this bull flag pattern, see the stock squeeze, getting higher lows while also getting lower lows, and the stock squeezing to its corner and getting that nice big breakout. Here's another easy example where you guys could see a $4 spike up towards around like 550. The stock starts falling, but also starts building higher lows. Stock squeezes and gets a nice big break and a nice big rip. So you could see right here that we have a lot of great potential on these bull flag patterns, and we don't need to get scared out right away. If we see a stock spike on up and we start seeing it drop, and it pops on up and we start seeing it drop, we see it pop on up, we could say to ourselves, all right, I don't need to sell right now. Bull flag pattern setting itself up. And then we get, double the money we just had, right? How great is that? Also, little sign up, because I'm noticing this. We don't need a lot of times, guys, like looking at this graph, is there something else that is appearing to you out of this graph, out of this chart right here? right? Is there something else that's kind of jumping out? And I hope it is, but a lot of new traders may not notice this, right? And what is that? Well, we have multiple patterns that I already taught you, right? Look at this. Starting off at the bottom right here. Don't we have, hold on, let me draw this out right here. Don't we have right here, let's say starting off, a little bit of a red to green move? Open up right here. Stock drops on off. U-shaped patterns, get a nice big spike. Isn't that a red to green move? Isn't that one of the patterns we learned? Isn't this right here a bull flag pattern? Isn't that one of the patterns we learned? Isn't this right here a U-shaped pattern breaking our resistance line for this nice big breakout right here? Isn't that one of the patterns we learned? Isn't this, a pretty nice trend line before cracking off and seeing sellers, start taking off this play? Isn't that a pattern we learned? These are 4 different predictable areas that you guys could have made money from our past 10 lessons if you guys have watched them, right? We have a red to green move. Boom, make money. Bull flag pattern. Boom, make money. U-shape pattern. Boom, make money. And on top of that, we have a bull flag pattern that we're bullish, or excuse me, we have a trend line that we're bullish on that, we're able to stay up above until it cracks, and then that's when it starts dumping on off. Isn't that crazy how that works? That we can combine all these patterns. And then let's say I missed the red to green move. Okay, I missed that. Okay, let's say I missed the bull flag pattern. I missed that. Well, then again, nail this one. And if you missed that one again, maybe play the trend line. And maybe you hopped in randomly right here and you played the trend line for a few cents. It's like you don't need to nail every single one, but this is why you want to learn multiple patterns. So in case you miss, all you know is the red to green move. You got this and this and this and this. Right? So you have so many different options. So you always want to be able to, have your bag of tricks, your bag of patterns to be able to find as many as you guys can. But isn't that awesome how it all works out like that? That if you miss one play, all right, wait for the next setup. You wait for the next setup, you're good to go. You wait for the next setup, you're good to go. Like if you miss one, it's okay. Right? So if you miss one play, it's all right. All right. Let's keep on going. Let's see what we have. What else we want to be focused on? What else we want to be looking at? We want to be going over now the ascending triangle pattern, right? We've gone over bull flag patterns. Now we want to talk about the ascending triangle pattern. As you guys can guess, we want to see a low float. This could happen in any time frame as well. We are going to be looking for stocks to build higher lows after establishing resistance. So watch for stocks to build higher lows after establishing resistance. That's one of the main ones. The corner of the triangle is where we want to buy. And as always, it must be a top gainer. So what are the 2 big ones right here, guys? Watch for the stock to build higher lows after hitting a resistance line. And the corner of the triangle is where you guys would like to buy these plays. All right, so let's go through this right here. What would that look like right here? Notice the stock. The stock has spiked on up. The stock spikes on up. We establish resistance. This is our resistance right here. And we could draw out our line going across the board. Notice the stock now is setting itself up in its triangle right here, right? We have our uptrend, we have our triangle, and the stock is getting tighter and tighter and tighter, just like the bull flag pattern, until it pops and goes on that nice rip, goes on a nice run. Usually the morning spike establishes our top resistance. After we establish resistance, we know what we have to break. And look at the buying volume, right? Look at the buying volume down here. That's leading towards this big time spike as the stock gets to the corner of the triangle. So the stock gets to the corner of the triangle, and that's where we get this big time breakout. That's where we get this big time move. That's where we get this big time rip. That's where we get this next leg on up, right? We're breaking resistance while building higher lows. A very nice thing to see. Higher lows are a great way to know a breakout could be coming, especially when we put all that pressure to the corner of the triangle. That's where we're going to start seeing that nice big rip and nice big run. You guys can see it here as well. Stock goes on a very nice spike. What happens? We build higher lows. We finally get that breakout right next to the corner of the triangle where we get our big buying volume start, coming on in right here. And that, pushes the stock above that strong, what? $5, guys. $5, third strongest resistance line in penny stocks, right? Natural resistance, why the stock got rejected here, and finally broke through here. Then the stock went on a rip all the way up to $6 natural resistance, where it's getting rejected, right? So, notice how a lot of these, still work out, absolutely great. And that's from the ascending. Again, ascending would be another word for climbing. Why are we climbing still? Because we're still building higher lows. The bull flag pattern, we were building higher lows and lower lows, right? The ascending triangle pattern, we're building higher lows and we just have our top resistance. right? So you guys can see that right there. Now, let's keep on moving along here, right? We have our SKLN one that we want to be looking at. I am going to skip, let's quickly, the mid candle and go to the descending triangle breakout pattern. All right, so the descending triangle breakout pattern, if we just went over the ascending triangle breakout pattern, the descending triangle breakout pattern is going to be the complete opposite. All right, but the thing about this, guys, they work best on the daily time frame. All right. They usually are from previous spikers. Previous big time spikers, it's usually about a month after their big time, rip, they start dropping, and it's a great area to pick up the second spike after the big time spike. So it's the same exact concept, guys. We're buying in the corner of the triangle. The only thing that you guys need to understand is this is from a previous top gainer about a month down the road where it's going to get its bounce play. Let's look at it, right? Big time spike. Stock goes on a massive rip. Starts falling, starts falling, starts falling. We have our support. The stock has right here, the stock has, its downtrend. And right to the corner of the triangle is where the stock starts breaking to the upside, right? We have our support, break to the upside. And why this also, again, let's say we don't even have the support line. All we need to know about looking at our uptrends and downtrends is the moment that this trend line cracks from the bearish side to the bullish side, we know, again, buyers are going to start moving back on in. Another great example is right here. The stock goes on a beautiful climb, a beautiful rip. We can look past chart history pattern support right here. Past chart history pattern support, stock's falling, 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 falling on this perfect downtrend. We hit support. It breaks this downtrend. All buyers come flying in on this, and the stock goes on a nice rip. Look how great that is, right? Look how awesome that is to see. And we're able to see the stock, go on such a great climb. We're able to see the stock go on such a great rip because of what? Because we have this downtrend. We have this nice squeeze pattern, right? It's absolutely beautiful. So again, just another form of a squeeze, right? And that's all we're looking for, just another form of a squeeze where the stock is basically breaking the trend from the downtrend to the uptrend after establishing some sort of support, which is showing, hey, buyers are coming back in on this play. The only thing different is that this happens on a daily chart only. It does not happen on the 1 minute, 2 minute, 3 minute, 5 minute. Usually if it happens on a 1 minute, 2 minute, 3 minute, 5 minute, it usually ends up cracking and falling. So that's why it's important to understand it's only on the daily chart. All right. Let's go back to the mid candle breakout pattern. This is more like the $1 breakout, as it doesn't have a U shape or a triangle. It's more, it does its own little thing. So mid candle breakout pattern, guys. Low float. Okay, we already know. Previous top gainer. Daily time frame only. And the main thing about this play is the stock will give back half of its gains or slightly less the day after it becomes a top gainer. That's what it's going to look like. So mid-candle breakout pattern. This is basically just the name I've given it towards it. It's when a stock spikes on up, falls back down about halfway of the top gaining candle of the previous day, and then starts spiking back on up. Now, why would this happen? Well, we'd see, let's say news comes out, a stock goes on a massive, let's say 200% rip. Then the next day, shorters take over, but they realize, hey, this is good news. I'm not going to short it too much. I'm going to lock in my profits. It usually falls back down towards slightly above halfway of that, breakout, and then we start seeing the stock move back on up. All right. So where would this be? Right here, BSPM. BSPM. The stock goes on a beautiful rip right here. Beautiful spike, beautiful climb. It falls back on down almost halfway, and then it starts moving back on up. So it's basically, we're saying buyers are in full control. The next day, shorters take over, sellers, but then people start buying back in on this play, and then it really starts taking on off again. The bigger the breakout, the better the mid-candle breakout can be. If you see a stock go from 25 cents, or if you see a stock go from 125 to 150, and then the next day the stock goes from 150 to 140, and you say, Dek, is this a mid-candle breakout pattern? Please. Again, that is not going to be a mid-candle breakout pattern. The numbers got chopped off. I apologize about that. But this is going from around $2 all the way up towards around $7. Now it's sitting towards around $5. So this is like a $5 spike. So this is a big one, right? Let's go over really quickly to right here, right? If we look at this play, all right, this stock has gone from $2 to $17. Then what happens? Notice, The stock doesn't just have one red day, it has 3 red days, but it's still at the mid candle of the main spikes. So, the stock is still holding up its gains. And then what happens? We get our big buyers to come back on in. So all the mid candle pattern is, guys, is we get our big time spike, right? We get our big time spike that comes on up, right? As we know. Then we have sellers that come back down towards around halfway through the spike. We may get about a period or two of consolidation, but then the stock, goes and gets next leg on up right here. All right, here's another example, a little bit smaller, so you guys can see. What do we have here? We have a nice big spike. The stock goes from 250 all the way up towards around this area of 975. We have one red day right down to the mid candle of the spike, and then the stock gets its next leg on up. Okay, so that's what we call the mid candle breakout pattern off of previous top gainers. Now I know this is a lot of information to take in. That's why I want to make sure you guys are taking notes. I want to make sure you guys are on top of this. Obviously, you guys will have this, but you guys are definitely. It's very important that you guys are understanding all this great information. So all the patterns that we have gone over so far today. Woo, what do we have? Well, it all starts with U-shapes and triangles, right? U-shapes and triangles. Who can name all the U-shapes and triangles right off the top of their head? U-shapes, breakout, U-shape breakout pattern, red to green move. What about triangles? Ascending triangle, descending triangle, bull flag. What are the 2 exceptions that really aren't either? $1 breakout and mid-candle breakout, right? So $1 breakout, all right? $1 breakout. What's right here, right? This is where we're looking for the low float, $1 breakout underneath 3 months. Whoopsie, those are the ones I told you, which we went to before, which was like CANN, right? Then we went over the U-shape breakout. The U-shape breakout, we're looking at this pattern right here, looking for the morning run, U-shape pattern, then, the nice big breakout for its next leg on up. Looking for the red to green move, basically the stock falling at the start of the day, breaking the open, getting the nice pop, getting the nice rip, for its next leg on up. We have a bull flag pattern, again, a top gainer play. The stock, forms its bull flag. In this example, again, I know it's kind of covered. It's right there. And then the stock gets its nice bull flag pattern, gets its nice rip and run. After that, guys, we have the ascending triangle pattern. Again, we establish our top resistance. The stock builds higher lows, breaks through the top resistance at the corner of the triangle. After that, we have our mid-candle breakout pattern, where the stock has a top gainer day. The stock goes on a very big spike. The next day, it has a red day. It could be 1 or 2 days until it comes back down to mid-candle, and then it starts U-shaping back on up, towards new highs. So that's great. We have descending triangle pattern, which happens on the daily time frame only, where the stock is falling after a big time spike, finds some support from the past, and the stock gets basically a reversal in trends. As it's downtrending, breaks out in trend reversal, starts moving back up to the upside. Now, as I said before, guys, I do want to show you guys the different areas of where to buy a stock on a U-shape. So if we are looking for buying on a U-shape, where would be the different areas? So for buying on a U-shape, let's break this down. This is kind of like a whole nother lesson within itself. Where are we buying? Discard. So let me bring all this stuff back on up right here. All right, so if we are buying on a U-shape pattern, all right, so we're buying on a U-shape pattern. Where are the different areas that we can hop in on a play? Okay, where are the different areas that we can hop in on a play? Well, we have a U-shape. Where would we want to buy the stock? We have different areas where we can buy the stock. All right, we are going to have area A. We call this the A wall. All right, we can have area B. We call this the B wall. Okay, we have C. Call this the C wall. And then we're also, last but not least, guys, we are going to have D. D right here, which would be the actual breakout. All right, so if we're talking about a U-shaped pattern, we have our A wall, which is probably going to consist of this area from here to about here. We have the B wall, which consists from about here to here. We have the C wall, which consists from about here to here. And then we have the D, which is any sort of breakout to the upside. Where would we want to buy a stock and where would we not want to buy a stock? Well, if we see a stock U-shaped pattern, all right, stock, let's say, shoots on up like this. Stock shoots on up right here, and now the stock is starting to make that U-shaped pattern, hopefully getting that breakout. Do we want to ever buy on the A wall? No, because again, the A wall could possibly start just dumping on off. right? The A wall could just lead to basically the stock would just be a pump and dump, and the stock would start dumping on off. We don't ever want to buy on the A wall, right? So we never want to get on the A wall because that just leads the stocks going to be dumping on off, and that won't be any good. Do we want to buy on the B wall? Well, again, let's say the stock is starting to form some sort of support, and what happens? You find support, and then it starts cracking on off right here, right? We could definitely see that happen. We've seen that happen a lot. So do we want to buy in the B wall? No, we don't want to buy in the B wall either at all. So we don't need to buy on the A. We don't want to buy on the B. Do we want to buy on the C wall? Yes. This is where we start looking to buy an entry because now we're starting to build higher lows. And we can look for an entry probably right around this area. And you're saying, well, Dek, resistance is all the way up here next to the D wall. The thing is, once it starts building higher lows, I'm not going to say every time, but most of the time, people know then, okay, we're U-shaping back up towards the high. So we're not always going to be able to get a breakout of resistance, right? Sometimes resistance is going to hold on up and the stock is going to turn and fall, right? It's going to hit that resistance line and start turning and falling. So why is it good to buy from the B to the C? Well, we know, again, okay, we're starting to U-shape back on up. Let's get in a little bit early. Let's say worst case scenario. The stock we get in right here, right? We get in right here and the stock, hits this resistance wall and starts falling back on down. Well, then what happens? Well, let's just get out right here then. And if we're in right here and we get out up here, what does that mean? It means we just made money, right? It means we just got made money on this play. Why? Because let's say we're in on this play. Let's say we're in on this play at $1. We got out of this play. Let's say that's 125. We got out of this play at 115, right? Let's say we have 1K shares. That just means we just made $150 in profit, and the stock didn't even break out, right? The stock didn't even break out. It's just we got in a little bit early before the U-shape happened, right? So what happened? So we just got in a little bit early so that if the stock couldn't break out, then we're still able to lock in. Now, let's say best case scenario. Best case scenario, the stock goes on a nice big breakout. Then what happens? Then we get sell like way up there and we can make, $300, $400, whatever. But it's nice to try to get in on a little bit of these earlier areas. So if the stock cannot break out, we're still making money regardless. And if it can break out, we're maximizing our profit. Now, can you buy on the D wall? Right? Yeah, you can 100% buy on the D wall because the D wall will, like, if you see a break, then obviously, we'll see a nice big ton of volume and you'll be able to, of course, hop in and be able to make some cash. But, you won't be able to make as much if, of course, you bought in at the slower area. Sometimes, again, buying at the D wall, the only issue would be, yes, you can make a lot of money. The only issue is sometimes you see fake out breakouts where you see like a stock shoot on up for a little bit and then start turning on down. And that would be better to be on the C wall. But it's definitely good. C or D is where you really want to be at. The C or D wall, that's where you really want to be at with your trading. It really comes down to, again, if you're a little bit more confident, buy at the C wall. If you're not that confident yet, buy at the D wall. Same exact thing with buying for triangles, guys. Buying for triangles, all we're looking for is we're looking for the stock to get tight in their triangle. If this is a river and the river is nice and big and we have all this power, we have all this force, and it's starting to get tighter and tighter and tighter and tighter and tighter and tighter and tighter, and pew, what happens? The thing just shoots on off, right? So eventually this thing's just going to, fly. So where do we like to buy triangles? Well, you can buy a triangle at a couple different areas. You can always buy the triangle right at the corner, or just look to buy the triangle at the base, support, 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 support. Just buy the triangle at support when it gets closer towards, that corner. Now, could there be a possibility that the triangle, starts turning? Absolutely. And that's where you always have your stop losses. But we don't ever want to buy early on a triangle at top because look how high this is. Like, we need the stock to break out and more just to make that money back. So always, if you see a triangle, don't ever buy at the top. Always wait for the corner or at least buy at support. That would be much, much better for you guys to be looking at. So, diving back into our little boot camp lesson right here. Going through all these. Again, we're buying on UShapes. Do we want to buy on the A wall, the B wall, the C wall, or the D entry wall? Again, C to D is where we want to be at. Okay, C to D is where we want to be at. Buying on triangles, what do we want to do? We want to wait for the squeeze, right? The closer to the corner, the better the spike can be, just like in the examples that we went over. Okay, so I hope you guys enjoyed day 11. We went over about 5 different patterns, 6 different patterns that lead to a lot of success and a lot of profit in the stock market. I hope you guys enjoyed that lesson. Make sure if you have any questions, you guys ask me. Again, I'm streaming every single day on tradecaster.com. You guys, of course, can join me and we trade live together. So if you have any questions, definitely let me know. Awesome job right here tuning in and, obviously study up on this lesson. It's going to make you guys a lot of money. I'm excited to see you guys profit.